I like that. Shortcuts get cut short. Monty, what did we say yesterday about the?
Just try.
Just do it. Just do it. I forget what I was trying to say last night. I tried rewording that. Sells coffee in here. Ed? Is Tommy here? Is it dinner from Zen?
He's gonna be.
Thank you so much. That was so helpful.
Was it?
Yeah. Oh yeah.
Cool.
Very helpful.
Cool.
So yeah.
Edgar, how's it going? We good?
Hey, can you hear us?
I wouldn't get their hopes up, no, because the premise is anybody insulin dependent can go in a diabetic shock, run off the road, get in an accident type deal.
I did twice. I'm in type 1.
Hey, can we get him a microphone?
Sir.
Yeah, he sounds echo. We want to get everybody got to be mic'd up for these, Edgar.
Love it,
Let me see here.
love it.
So while Edgar's getting mic'd up, I guess, topic of today is going to be the 5 areas that you can lose business in. Somebody told me, they said, I don't like that title because it's kind of negative. They said, I don't like 5 areas where you can lose business. So why don't we call it the 5 areas where you can keep the business? I said, all right. I mean, you could look at it that way as well. Okay. So regardless of what you want to call it, it's the 5 areas that's going to keep you to have the highest quality of business. And they're all up front. And what we want to do is be proactive and hear from the GOAT, from the best of all time, and get his insight and his wisdom for us. And he's going to go over and I'll, I could, hop in here and there, but, you guys can hear from me anytime. So while we have Mike, I want to make sure we get him mic'd up. Do we have the mic hooked up yet there, Edgar? Is it working?
Can you hear me?
Yeah, sounds good. There we go.
Awesome.
That's the audio we're looking for. So the 5 areas to lose business, Mike can go into detail on them, but when you look at your progress and persistency report, which we call this your report card, at the end of the month, it's going to show you your gross ALP, which is how much you wrote, and then it's going to show you your net ALP, how much is I guess left after it fell off. So there's 5 ways you can have business fall off on your PMP. The first is a decline, then a withdrawal, then an incomplete, then an NTO, and then a cancel. So after these things occur, there are reactive things that we can do to put the business back on for the most part. Some things you can't fix, like a decline, the 99% of declines, you can't fix those. Okay. But there's reactive things that we can do. But I would rather do it right the first time, so I don't have to do it over and have to come back and try and put business back on or fix things, right? If you do it right. So I want to talk about the proactive ways to do this, we could just break them down by each area. So, the first thing would be the declines. And if you guys are obviously make sure you guys are taking notes on all this stuff. But Mike, if you could give us your expertise, insight on the declines and what you see, what are the best practices, what are some just rules of thumb to live by, and in order to make sure that you have no declines, and what would be, you could go over the numbers like you were saying yesterday, the 22114 or whatever the numbers were. There's a combo. He had the magic combo, so maybe you could go over that with us too. So I'm gonna pass it over to you, man. I appreciate it.
Cool. So can you all hear me fine? Hey, if I wrote on the board, will y'all be able to see the board? Okay. So I just went over, some of this with the leaders, in detail. And I do have just a slide and a PowerPoint on like preventative measures, but I wanted to, to make it in baseline, to make it easy. Okay, so, the 5 areas of fall off. Well, what I wanted to do is give you an easy way to remember your target numbers. Okay, and if you were in the leadership class, you can't answer this. But if you weren't, my question to you is, do you know what state back in 1951 that American Income started? Anybody know that?
Is it Texas?
Nope. Back in the day, Bernard Rappaport opened up in Indiana. Okay. Yep, good job. Right? Now, Indiana. So let me give you the initials of Indiana. Okay. And it's IND. Y'all see that? All right. And then what city in Texas is policy issue, licensing, underwriting? What city in Texas is that? Okay. Waco. All right. So Waco is WC. And here's an easy way to remember these numbers. So I always say Indiana Waco. Indiana, the I stands for incomplete. The N stands for NTO. So incomplete, NTO, decline, oh, yeah. Withdrawn and cancel. And to remember these numbers, it's extremely easy, is 1, 1, 2, 2, 4. So if you remember Indiana Waco, and then you remember 1, 1, 2, 2, 4, that is your target numbers on each section Tommy was talking about. So this total equals 10%. So we give you 10% buffer, right, for a fall off. And from that 10%, as I was talking yesterday, is 90% net to gross. You know, I mentioned 90, 80, 70. This is the first formula of the 90% net to gross. So 90% net to gross should yield you an 80% 4-month retention, which will yield you a 70% 13-month retention. Okay. So if y'all have any questions, please, I'm here to help. Okay. Now let me go into, you know, each section and one, so you're not reactive. And Tommy mentioned it, right? You know, just do it right the first time. And that's my motto. I mean, John Wooden says, what, do it right the first time, because when are you going to have time to do it over? Right? So preventative measures up front to prevent the pain in the butt stuff that you have to go and chase 5 to 6 weeks down being reactive. So what do they say? A pound of cure, something up front? Ounce of cure. See, perfect. So I say this because, like, leaders, right? And you're in leadership, or even just getting started, even just started a few weeks ago, right? You know, one is, I always say, being a hawk on your business, but being about your business, okay? Because I always say, this is your business. You're getting paid, you're getting advanced, you're getting bonused, and you're getting renewals on this business. So being all about your business, because you want your business to pay for a lifetime. It's not short term. Yes, the short term is you get paid. I mean, we get freaking paid big time advances up front, and bonuses are sick. I mean, they're crazy versus back in the day, right? I mean, just imagine back in the day, like you're an agent, we had to net $6,600 in a month, and then you would get paid in the following month, in the middle of the month from that. And it was like 6%. I mean, it was, now it's crazy, weekly bonuses, and then it's a graded. I mean, they're sick. They're paying out more than ever before in the history of the company. You know, and it pays. I mean, it's quantity and quality, right? Those two. So let me go into, you know, incompletes. Just review this. I know Tommy started with declines, but I'll get there. So causes of incompletes. You know, incomplete questionnaires on the app up front. Also, the main two is medical records. So we couldn't get medical records. We went out for medical records. Doctor didn't respond. Incorrect doctor on the app. And then number two is exams. So we requested an exam. We contacted the client. They never called back. Rescheduled. We showed up. A nurse showed up at the house, and then the client no-showed multiple times. You know, or you know, cancel the appointment once the nurse was at the door. I mean, stuff like that. Right? Got a question?
Quick question. When we receive a bulletin for, like, you know, usually it would say, please assist in exam scheduling.
Yes.
Do you guys, or does like the exam one, do they reach out prior to that initially? Or is
Yes.
it up to us to, you know, be the first point of
Mm-mm.
contact?
He's asking about like the point of contact. So when we order or home office orders an exam, that order goes to exam one. And then the nurse and the coordinator attempts to call them, coordinate it. What I mentioned earlier, there is two things that can help you. You know, one is on the record side, on the Agency Resource Center. And if you just got started and you're not familiar with the Agency Resource Center, I would log on ailife.com and I would utilize your resources. There's a ton of resources at your disposal. Agency Resource Center, and then AI Records, a special website that you can go on, you can log in and check the status of your apps that are requesting medical records. And you can see the notes from AI Records in there. And in fact, you can go in there, ask a question, and add your own notes to that specific policy. Or you find out that the client, you misspelled the doctor information, or you have a second number, or you have a fax number that they can fax the request to. Or the client contacted you and said, hey, you got to talk to Sally Sue and at this number, and they're expecting you. You can put those Sally Sue notes in to that case and add it to the notes in that policy. So that's one, AI Records, the special website. Number two, Exam One. Exam One has a website that you can log on to, that you can check status of your exams, you know, as well. So it'll tell you, excuse me, every time that the examiner or the nurse or the coordinator contacted the client. So it'll say left voicemail, text, emailed, called, left voicemail, text, called. So, you know, and every single date and all the details. So then at that point, I was just saying to the leaders, so does somebody have to admit that person in? I was saying to the leaders that I had a situation a few weeks ago with an exam company that, the agent was like, hey, they've never contacted my client. So I was like, well, let's get to the end of it, right? So I got with underwriting and said, hey, they're saying that they never contacted the client. And they're like, well, here is the notes. Here's how many times. And I think it was 17 times that they've attempted to call and contact this client and no response. So at that point, you got to make a judgment call on what to do with the case, because anything that's incomplete is before issue, meaning any policy before issue, you can preserve your quality. And Jackie knows and very familiar with this, you could possibly put a no production on it to preserve your quality if it's never going to happen. So that's incomplete. Okay. So full doctor's information, prepping the client for an exam, you know, up front before you get off the phone, spending a few more minutes on the phone with the client. And if you ever get the situation that the client says, you know what, if somebody, you're talking to me about exams, physicals, if somebody has to come to my house and draw my blood, you can go fly a kite. Well, if you get that situation, I wouldn't write the deal. More than likely, they're hiding something from me. I mean, me personally, I've had it. You know, a guy, I remember distinctly, firefighter, he had Hep C, right? He wanted a policy. I wrote him. Then he walked outside with me. He didn't want his wife to know. He got Hep C from somebody, right? And he was like, hey, they're going to do an exam. I said, there's always a chance for an exam. Yes. And he went, they can't do an exam. One, I'm a firefighter. I could lose my job, and I got Hep C. All right, dude, why didn't you tell me? He went, I couldn't tell my wife. I just freaking alt expelled. I didn't upload it. You know, so items like that. Okay. Number two, NTOs. Well, first, let me go back to incompletes. Is there any questions, on incompletes and then
Can I
also
make a
preventative?
comment?
Go ahead.
Just a quick comment, just guys, so you guys know what these numbers mean, because we got some new people on here, and I'm thinking like, maybe I just want to make sure that you know what this means, is that the 1% means that out of all the business that you wrote, only 1% of the business can fall off due to incompletes. That's what those numbers are. You don't want to have any more of your business fall off higher than any of these percentages. So that's what he's telling you guys, is the main reasons why people's business incompletes is because of medical exams, is what he's saying. Medical
Yes.
exams and then medical medical records. So, being wary of this, make sure that we're just doing everything we can proactively. Is there any other things? I just had a question. Is there any other in our agency, maybe just looking at, our specific business, is there any other thing that you're seeing that would cause incompletes?
The only other one is like the incomplete application, meaning not exposing everything, right? Or asking all the questions. So, and if you just got started, and it might take some practice, because the back of the app on the questions, some of them are tongue twisters, endocrine disorder, all that, right? But you might have to practice those questions beforehand, because legally you have to ask every question as it's stated in its entirety, and then write down whatever the client responds with. So, so incomplete, meaning incomplete is they have high blood pressure, but didn't expose that, or you didn't ask the question, and then they need an incomplete or the blood pressure questionnaire, and then that never gets completed. So just know, I mentioned this in the managers meeting, and if you're new, and you can tell the client this, but it's a catch-all. Have you taken any prescriptions in the past 5 years? Right? Or been in the hospital and had an exam in the past 5 years? So any prescriptions? So it's a catch-all, meaning it's an open-ended question. Are you taking any prescriptions or have in the past 5 years? So, and they say yes, you just expose that on the app. But it's mysterious sometimes that maybe not asking that question in fully, and then home office calls them, Waco, and then they find out that it's not a clean app, that they're taking 7 meds, but it was never exposed on the app. So just legally, you're obligated to ask all the questions as they're stated and write those and expose those on the app.
So to close it down, guys, real quick, an incomplete means that we sent an application to home office and the underwriters are trying to underwrite the policy and get it issued, but they never were able to complete the underwriting because of multiple reasons, like we just went over, because they needed to find out what was the medication for the high blood pressure, or they needed to fill out a blood pressure questionnaire, and we never got them the information. So therefore they had to incomplete that application. They stamped like an incomplete stamp on it, said we were never able to complete this one. And then it falls off, our book of business. So one way to make sure that don't happen is to over document and document as much as you possibly can when you send the application up, so that the underwriters aren't reaching back to you saying we need more information. And then if you can't get that information, then that's where this stuff happens. So sorry, I didn't want to interrupt there, but I know you had a question over there.
No,
too.
it's all good. Just, I want to make sure, some are just getting started, and it's great to start and form good habits up front. Okay. Number 2 is NTOs. So what causes that? NTO stands for not taken out, meaning the policy went through underwriting, was issued, and there was additional requirements needed or a modification sent to the agency. Meaning, let me give you some examples that, they found out, or it's on the app that they have blood pressure and diabetes. So there's a higher risk classification because, just because they got high blood pressure and diabetes. So they were what they call rated, additional risk, $14 a month. Well, in that, to place the policy, you call the client and you place the rating, and then they take the additional 14 and we mail the policy and you're good to go. Well, what causes the NTO is you didn't prep, or possibly the client didn't understand that there is a rating on a policy, right? At the end of the presentation, it asks all the questions, like there's always a chance for a rating. There's always a chance, right, for a physical. Also, you could get a graded death benefit, rated, declined, issued standard. So not skimming through those questions at the end of the wrap up on the EAP. But, an NTO is possibly the client was rated, just say $14, and they denied it, they didn't want it, they canceled it, or you couldn't place it, the rating, or maybe it was mailed, but there was no follow-up. So we say thanks, but no thanks. And we refund, the policy goes NTO, not taken out, and we refund all the premium back to the client. Or a second scenario is, they had maybe arrest history in the past. Maybe they were loaded up with ADB, waiver of premium, items like that. And we were like, hey, we're not willing to take the risk. So items on the policy were removed, accidental death benefit, waiver of premium, and they need to sign for it, accepting that those things were removed. And then there was no follow-up, and or the client denied it, or a client never signed it. So then again, we say thanks, no thanks, and we refund all their money because of a simple never got the signature. Or they were mad. Maybe the client was mad because you're like, you never told me this, that I got arrested. I just got out of, prison years ago. I've got multiple speeding tickets, right? I got too many points on my record, so you can't get ADB. Maybe you prepped them and got them all excited about it, but if they've got too many driving points, reckless driving and stuff, they're not going to get ADB. So.
What's the best way you found to let a client know that they've either been rated or a decline counteroffer? How do you approach that?
So one is if you tell them upstream, right, then when you call them, meaning you prep every single person, even if they're perfectly healthy, for a rating. I mean, they could be rated, they could get declined, they could get graded death benefit. And when you're doing the wrap up at the end of the EAP, and it does say that. So if you told them and it's crystal clear, that, hey, I don't know, I'll talk to the underwriters for you, I'll send this in, and there's always a possibility of what they call a rating on your policy, simply because of an additional risk classification. And I don't know exactly, how much, but I've been doing this a long time. Even if you just started 2 weeks ago, I've been doing this a long time. So if it comes back $10 to $15 additional a month, are you fine with this? Before any changes, I will let you know. Are you fine with it? Okay. So you told them up front, right? Crystal clear. Then in 3 to 4 weeks, you get the policy, it got rated. It got rated $11, right? So you call the client, and it's always good news, right? Hey, Johnny, got some good news for you, man. I know we talked about this. You better have talked about it. I know we talked about this. We weren't sure. You ready for this good news, man? It only came back $3 additional a week, or whatever it is, $2.80 additional a week, or a total of $11 a month. Man, I wasn't sure. I wasn't sure what yours was going to be, but man, great news. So what I'm going to do, I'm going to go ahead and process this. It'll be $11. on it, right? Because of, we talked about your diabetes, we talked about your blood pressure, arrest, whatever, right? And they better not come back and say, we never talked about this. That's going to cause a cancellation. So prepping them up front, upstream, and then when you call them, it's always, I've got some great news, man. They went ahead. I know we talked about it. You could get declined because of your higher risk classification. You're not going to believe it, but they went ahead, issued you a policy, and it's only $3 difference a week, man. So, hey, congratulations. Welcome to the family. And then what I'll do is I'm going to get that it comes out to $11 a month, but about $3 a week. I'm going to go ahead and get that processed for you and then get your policy mailed to you. And then they go, oh, okay, good news, right? So it's always good news. Go ahead.
What if they say they're not for the rating? Do you not push it through? Do you wait to even see if there is going to be a rating?
Oh, like up front when you're writing the deal?
Yeah.
So he asked, hey, like when you're in or on virtual meeting with the client and they were like, hey, I'm not willing to take, if it's $1 more, I'm not taking this policy. And they got diabetes, I wouldn't do the deal. They've got any medical conditions, I would not do the deal. Or I would lower it, right? Because I was like, hey, I've been doing this a long time. I mean, and there's higher risk classification. You got a driving record, you got blood pressure, you got diabetes, you're overweight, you got depression, you know, any of that. So he asked, like, hey, if the client up front says, you know, and they've got medical conditions, and they said, hey, if it comes back $1 more a month or over $1 more a month or whatever, I'm not taking the deal. I would be cautious, and to the point, I don't even know if I would write the deal. You know, and if you know, I can tell you some certainties, you know, that if they got diabetes, they're going to get rated. If they're overweight, there's a height weight chart. Y'all familiar with the flash sheet, the yellow flash sheet? So using that flash sheet, right? And you say, hey, they're a T4 or a T6, for sure, guaranteed they're going to get rated. And if you don't tell the client that up front, then they're going to be mad. Just like, you know, as I mentioned yesterday, people don't like surprises unless it's a car or a house or something. But, you know, if you don't prep them up front for a rating, you're in trouble. Does that answer your question? Okay.
I think politely tell someone they're overweight.
One, I mean, I say people know if they're overweight. I mean, people aren't stupid, right? So, I mean, when I was doing it in person, I would make a joke out of it, you know, just say, you know, all right, what's your height and weight? Okay, don't tell me. And then to the lady, hey, but how thin are you? Right? And they always crack up, right? Like, hey, how thin are you? And they're like, oh, thank you, right? Whatever. So, but how do you tell people, you know, that they're overweight? If you have that flash sheet, and I would have that flash sheet like taped to your monitor, right? Because you're looking height, weight, bam, okay. So, and they're overweight. Say they're a T6. You can take that flash sheet off. You're doing virtual. You're like, hey, as you may or may not know, everything in this industry goes off a height and a build chart. And I'm looking at yours, and hopefully they say, yeah, I know, right? I'm overweight, whatever. And, you know, I'm looking at yours right now, and you're a little over, you know, the build chart. So I want to be straight up. I've been doing this a long time, and you're gonna get into an additional risk classification. So it's going to be more a month, you know, for your program. Now, hey, the good news is when you lose weight and keep it off a year, just let us know and we'll adjust the premiums. But you have to keep it off 1 year, just like tobacco. Any tobacco status, smoker, dip, chew, cigar, any of that, they need to be tobacco free for 1 year.
So I've had
And we'll
clients tell me, I've had clients tell me, you want to know what? And this is you building a relationship with the client, and then they're comfortable and you're comfortable talking with them. I've had clients tell me like, you know what? I've been meaning to lose a few pounds anyways. I'm like, see, this is a good thing. I've had clients tell me, you know what? I've been meaning to quit smoking anyways. So what's a cool little side thing is we can be life coaches for our clients a little bit, and kind of suggest some healthy habits along the way. And then some way you can put it is, I've heard people say, I've said it before, they go off of height and the weight. And based on your weight, you're just a little bit too short for your weight. So if we can get you to be a little bit taller, or if you're weight a little bit, so it's just, you could just say it that way. You're a little bit short for your weight.
Okay. Oh, I got it. So there is a build chart, and this build chart is in the eApp. And it at the very top of the eApp, there's a drop down underwriting, and you'll see the underwriting manual, but also you'll see the height and weight chart, and it's on there. But also I've got yellow ones of these as well, and we can get Tommy, to get those. But I would definitely have this readily available in front of you. So somebody asked the question, where do they get it? That's it. But what was the question?
Indira was asking about it, do they have to accept the rating? So they give you
No.
options on that. They give you options on that.
Yes, there's actually 3 different options. So let's just say somebody was a little overweight and they got rated $12. Right? So they can take, and I always shoot for the rating, simply because, one, they're going to keep the original face, keep face, and increase premium. But also there's what they call a RT99. It's called a counter offer. A counter offer is save premium, reduce face amount. So they can always do that too. That's 2. Number 3 is there is an opportunity to double coverage. Meaning, let's just say they applied for $10,000 worth of coverage for $50 a month, to make my math easy, and they got rated. Well, once that policy comes in, they can do it. It's a one-time deal. Upon a delivery, they can go ahead and double the coverage. So double it to 20 grand, and then double it to $100. So because they know something's up, they're unhealthy, they got rated, all that. So you can double coverage, and then the double coverage has simplified underwriting. Typically, they're going to issue the policy. All right, but that's the 3rd choice, but it's not always guaranteed to double coverage. But it is an option. I always go for the rating because I don't want to reduce. Right. So, but if you prep the client for it and they're fully aware of it, and they're like, hey, if this comes back an additional, I don't know, $3 or $4 a week, are you fine with that? And if you don't get a good vibe on it, right, I would be cautious about the deal or lower it. Right. So that makes sense. Okay. So that's incompletes, NTOs. Let's go to declines. So what causes a decline? Decline is, one, they found out additional information on medical records that, crazy stuff, that they just had a heart transplant 6 months, that they were hospitalized from blood pressure 8 months ago, and it was never exposed on the app. They got, what else? Oh, depression, and they were hospitalized from that, all right, 9 months ago. Items like that. So they find additional information that wasn't exposed on the app. Also, they checked RX history, meaning pharmacies. And then they found out that these folks are taking a medicine cabinet of prescriptions and it was never on the app. So preventative on declines is exposing everything on the app. You know, number one. Number two, putting full doctor's information on the app. Meaning don't just put Dr. Smith, Chicago. Put Dr. James Smith, 123 Mockingbird Street, Chicago, and a phone number. Now, if it doesn't fit all in that one line, you can always put it in the remarks section on the second page of the app. So also declines that, you know, that driving record. I mean, a driving record, they've gotten 10 speeding tickets in the past year. They're going to be declined, postponed. They just got out of the hospital, right? That decline, postponed. They're pending surgery. So a client tells you and you're writing them and they're like, man, this is perfect timing. Thank goodness I got this because in 1 month, I've got kidney surgery. All right. Well, one, that's going to be a decline. You cannot write them. If they have a pending surgery coming up, I would not write them. Or they're saying, hey, I'm getting a liver transplant in 2 months. You can't do it. Or I'm currently on dialysis. Can't do it. So the catch-all is what prescriptions are they taking, have taken, or currently taking, and then asking all the questions as they're stated on the app.
So on the senior graded whole life, there's a question about do they require oxygen, assisted breathing. There's no question like that on the normal super combo, but if you obviously could tell if they had like tubes, and would that be something you put under like the respiratory?
Yeah, that would be a decline.
Okay. I mean,
Yeah.
obviously, but
Yeah.
sure.
Currently on oxygen, or I mean, normally, like when you're walking in, I know it's virtual, going to their house and it says flammable, oxygen in use, all that, and you got the tanks and the tubes, it's uninsurable on that person. So I wouldn't take any chances. You know. Also preventing declines is, you know, being more cautious. If they're taking multiple prescriptions, you know, they smoke multiple prescriptions and they're overweight, be cautious and trial that, right? And see, because if you trial something and it gets declined, it does not impact your quality or your retention. But if it gets issued, right, and it gets issued standard, then it counts as production credit and you get advanced on it a few weeks down the road. Okay.
So basically, anytime that you have any questions, any doubt, just always trial it. If there's like any uncertainties, like is there a line? Like
Typically 3 strikes and you're out.
3 strikes and you're out.
Right? Like high blood pressure, overweight and diabetes. You know, things like that. I would definitely be cautious and trial.
So if it's like maybe like answer yes to one of the qualifying questions, or like maybe one prescription.
No, like they're taking high blood pressure, 5 milligrams, lisinopril, well under control, never hospitalized, nothing, that's fine.
Okay.
And normal height, weight, don't smoke, they're fine.
Okay.
So I don't want y'all to start trialing everything, no.
Smoking is a strike.
Huh?
That's one strike. Smoking is a strike.
Yeah, so one, like well under control, never hospitalized, items like that, you know, depression, meaning because of being in crowds or anxiety, small prescription, doesn't see a psychiatrist or psychologist, well under control, been under control for years. There's chart notes on it, not an issue. So.
I have 2 quick questions. If a client gets declined, they can write a letter to home office to find out the reason, right?
Yes.
Okay, it has to be a written letter? Or,
You can put it on a PSR form and get it DocuSigned. They can email you. From the email has to match their original email on file. Yes. So And he asked about, okay, somebody gets declined and then they want to know why. So yes, they can always inquire with underwriting. Underwriting's not going to tell them over the phone any of that because of privacy, HIPAA laws, but they can always write and get it and they'll send it to them of why they got declined.
And then, just a somewhat related question. How come if you submit a deal standard and they get rated, you don't get paid on that rating, right?
No,
But if it's a trial, you get paid with the rating?
no.
So never-
You don't get paid on the rating, right? Production credit. You just get paid on the original ALP that it was, and not the difference between the original and the rating. Okay, so y'all understand declines? And
I
then
have
the
a quick
target
question.
is 2%. Go ahead.
With the senior super combo, they obviously have much less questions that need to be answered, but they may have those medical issues. Do we need to be adding the medical questionnaire, or do we not, since it's not asking about that since they're a senior citizen?
So what, they're not taking prescriptions?
So let's just say that
Oh,
we're
a
doing
senior life, okay, on a graded
Yes.
death benefit?
Sure.
Yeah, on a graded death benefit, no. I mean, anybody 60 to 80, right? And they're taking blood pressure, you can put it in the notes, but the blood pressure questionnaire is not necessarily, because that's not a factor on the senior graded policy, 60 to 80. All right, but they're looking for any questions on the back of the app on a senior graded 60 to 80 that is a yes on the back of the app. It's a simplified issue and simplified underwriting. Yep. Now, one thing it doesn't ask is about Alzheimer's. And if anybody 60 to 80 is taking Alzheimer's medication or preventative, they will be declined. Oh. That's declines. Withdrawals. Okay, so the decline ratio target number is 2% or less. Withdrawals, same thing, 2% or less. A withdrawn and a cancel are the same thing, it's just timing. A withdrawn is before the policy is issued, and a cancel is after the policy is issued. But they're the same premise and the same thing. So withdrawn is, the policy, they maybe didn't understand it completely, or there was an oversell situation, meaning taking too much out of the house. Buyer's remorse, right? That, hey, it looked good. They were excited on a Zoom call, all that. And then it drafted once. And then they looked at their budget and they're like, no way, cancel it. And we say, thanks, no thanks, and we refund all the premium back. So I've been looking at some of the trends for the agency, and withdrawals are higher than average for this agency. So that's just telling me, at the end of the presentation, the button up, the solidification, and I always say checking the pulse. You're not sitting in front of them. You can't sit there and check their pulse saying, does this $125 fit in your budget, every single month? So spending a little more time. I mean, it's virtual, right? Spending an extra 5 minutes and loving the one you're with, but also without a doubt, before you hang up, right? Checking the pulse, cementing the deal, but also, making sure that that deal fits in their budget every single month for the rest of their life. All right. And good indications on withdrawals is if a client, here's the red alerts. If a client says, can you hold this draft for 3 weeks? Your answer should say no, be no. All right. And reduce the coverage. Because if they can't afford every single month at 125, and they don't have it in their bank account at the time you write the app, who's to say they're going to have it in 6 months from now or 6 years from now? You know, so that's a red alert to me. If somebody tells me this, you know, like, hey, when is this going to draft? Or, hey, can you hold this for 3 weeks? No, right? Or number 3 is if a client over the phone, over the Zoom call says, hey, can I cancel this at any time? All right, that's a red alert, meaning you got to be cautious, right? So maybe on that, you need to reduce the coverage. You know, and I said it, and I've said it multiple times, but it's better to take a smaller deal that's going to pay a lifetime. You know, cut it in half, get them in, get their foot in the door, get them enrolled, and go and POS them in a year and a half from now, and add coverage then. So now they're comfortable with it, they're familiar with it, they believe in insurance, and POS them. So, and you know, I mean, getting home runs all day, right, is not necessarily, you know, the best thing. I mean, I always say base hits, you know, getting a $40 deal, getting an $80 deal, getting a $50 deal, 60, and then you get a home run and a $125, $150 deal, right? But base hits, you know, are fine. Base hits will win the game, right? So smaller deals, that's going to be on the books. And without a doubt, before you hang up that Zoom call, without a doubt, in your mind, in your heart, you know 100% that that policy is legit and it's going to pay a lifetime. And you've talked to the client, you did everything you can, you cemented the deal, you checked the pulse, checked the budget, and then you're comfortable before you hang up that Zoom call. Okay, so that's withdrawals. Cancels, 4% we give you. Cancels and withdrawals are the same thing, it's just timing. Same premise. Cancel is after the policy's issued, then buyer's remorse. They get the first payment, they get the first draft. You know, number 2 is they are unclear of when the exact draft's going to happen. I mean, that's the number 1 reason people cancel is they didn't know it was going to draft immediately. Because when you put in the app or the e-app and you put in a date, say the 25th, on the e-app, it's going to pop up. Your next draft is going to be June 25th. And then you tell them that, and that's all they hear. They're not hearing that. I wouldn't even tell them that. I would say, hey, you know, we're going to set you up on the 25th of every single month. And initially, I'm going to upload this. It's all encrypted. And your bank's going to talk to our bank, and we're going to do it, and it's going to draft. This will be processed immediately and come out immediately. So if they're unclear about the draft up front, that's going to cause cancellations, right? And number 2, then NSFs, non-sufficient funds, right? You know, that they think you said June 25th. So they're thinking it's going to draft June 25th and not May 28th. So just, they got to be very clear to prevent cancellations. You know, that when it's going to draft, I always say it's going to draft immediately. Every bank's a little different, but for the most part, it's going to draft immediately. And your second draft will go in on next month on the 25th. So, but we give you buffer, we give you 4% on the cancellations, which, you know, these total 10%. So we're going to give you buffer of 10% fall off. Things are going to happen. I mean, it's mysterious that, you know, I've heard pretty much everything. You know, husband and wife, I enrolled them today. 3 weeks later, something happened. Dog died. They got a divorce. Husband already moved out and wife's moving to Italy. What? Like what? You know, I mean, I've heard everything. So it's going to happen, but your target is these numbers. And if you're all over and cautious about your business, you know, I would say just one deal. There could be situations that one deal makes you or breaks you. And then I want to leave you with this, you know, because your APMP, your progress and persistency report comes out every single month. It's your report card. And you know, even if you just got started, you're going to get in leadership. Then you're going to be responsible for a team. And it's priority to check your team's report card every single month and also fall off every Thursday morning on advanced reports. If you can't, I don't want you to be 100% reactive. You know, like, oh my gosh, this one went NTO. But I had 60 days to correct the policy. And in that 60 days, I never did it. But now it fell off and now I'm going to reactive and trying to chase it. But being a hawk and checking your teams and your advanced report every Thursday morning will help you, and you can check your trends. But also those, and I know there's a ton of people going to qualify this year for convention. So just know convention numbers, right? Retention factors, January of 2021 through June of 2021. That block of business right there, January through June, is the factors that will spit out January 1st for your retention factors to qualify for convention. So you're in the heat of it right now. And in fact, next month is the last month, right, for your retention to be exposed for convention. So if you're in a situation that maybe your January, February is not trending right, it's better to do it and do the reopens and reinstatements right now versus you can't wait till November. And on that reopens and reinstatements, I sent Tommy a step-by-step on how to do a reopen and a step-by-step how to do a reinstatement virtually. So y'all can do it too, DocuSign. It's easier than it has ever been in the history of the company to conserve a piece of business because you don't have to chase them. You don't have to drive out there, any of that. You get them on a call, virtual, and do it virtually via DocuSign. It's easy. So if you want to sit down, I can roll through it. You know what to do. I went through with all the MGAs, I think except one, on how to read their extracts and the team's extracts, and then how to do reopens and reinstatements as well. So I want to open it up, you know, for any questions. I've got some questions in the chat. I'll go through those.
Yeah, guys, we got maybe a minute or two, just because we have some of the, we have a meeting that's going to hop on here at 11. So we got about a minute or two if we got some important questions we want to knock out. Otherwise, hopefully you guys got some great notes. I mean, you probably got, if you were taking notes, you'd have nonstop, you would have been writing because there's a lot of stuff to go over here.
So in the chat, it says, where can we access this height and weight sheet? Google Drive, does anybody know the name of it? So Tommy, I don't know, is it on y'all's Google Drive, the height and weight chart?
That those guys would know better than I would.
Okay, but it is on the e-app. So
Yeah.
on the e-app tab at the very top, there's a drop down, and then there's two things. There's the underwriting manual, the whole thing. I would recommend saving that to a PDF and putting it on your desktop.
Mhm.
And number two, there's a height and weight chart. So I would recommend printing that out and
Yeah.
keeping it to your screen and even dragging it to your desktop. So that's the height, weight
Cool.
chart and underwriting manual.
All right. Well, hey guys, we got to jump off. I apologize if we cut this short, man. I really do. But I appreciate, Mike, you taking a whole hour and giving us all this. And you guys see that there's so much to learn, and we'll keep taking this to the next level as we keep learning this stuff too. So, and Mike can hop on calls from all over the globe now that we're virtual. So I'm sure we'll be bugging him some more and get him on here again for us. So yeah, I'm going to slide over to the other meeting. And then Mike, you know, if you got anything to handle for the next, half hour or so, and then I'll see you soon for lunch. I just shot you a text message. So
Okay,
I'll talk to you guys soon. Great job today, guys.
go.
Let's get it.
Thank you.
Thank you. Sure. Do what now? Oh, I got it. How do I turn this off?